97% of traders do not know how to find pullback key levels correctly, and today I will teach you exactly how to find them in 4 simple steps. Let's get started. Here is something important to understand about pullbacks. First, pullbacks are made up of 2 parts, which are the swing part, which is where you draw your key levels, and the pullback itself, which should not be strong compared to the swing. Now let me expose some important information about the swing. So the goal of any trader when trading pullback is to correctly identify the pullback key levels. So now when the swing is like this, how do you know which key level is going to work? Well, this particular candle doesn't tell you any details that will help you identify which key level is going to work. So let me show you the secret on how to identify it. So we're still focusing on the swing, and this swing that we're looking at is in 1 hour time frame. So we need to go down to a 15 minutes time frame in order to see some interesting information. So basically whatever time frame you are seeing a pullback on, then go back to a smaller time frame in order to see the details that are hidden behind that swing, so that you can identify these levels correctly. So as you have seen before, this is 1 hour time frame, and this is how this 1 hour swing looks like in 15 minutes. So as you can see, now that we are in 15 minutes, there is some information that we can see on this swing. So now because we can see some information, now we can start drawing our potential key levels, as you can see. But there is more. And the big question still stands, which is which key level is going to hold? And this is a money question because it decides if your trade is going to be successful or not. So basically by you answering this question correctly, that means your trade will be successful or has a higher probability of being successful, which means more money in your pocket as a trader. So to answer this question correctly, we need a volume data to back our decision of which key level to choose in order for us to make the right decision. And the volume data will tell us the amount of trading activities which happen on each key level. So now let me show you how to read the volume data correctly to interpret what is happening on these key levels. So in volume indicator, the tall bar means that there were a lot of trading activities in that particular time frame. So if we look at the volume of our first potential key level that we have drawn, you will see that the volume is low. That means it's a low probability key level. So if we move on to the next key level, you will see that the volume was a little bit better compared to the previous volume. And if you go to our final key level that we have drawn, you will see that the volume was very high. That means there were a lot of activities that happened in this price point or in this time frame. So as you can see, on our first key level with low volume, the market did hold a little bit and did a small push, and that push was violated here, was broken through. So on the second key level, which has a little bit of volume, you will see that the market did hold a little bit better than the previous key level. So it did hold here and here. So on our final key level, which had a lot of volume, you will see that the market did hold in 2 places and it completely turned around. So which shows how powerful a key level can be when it's backed by the powerful volume data. And of course, the trade took off successfully. And I've made the most powerful video about key levels. Check it out here.